Hello everyone, in this series of pre-scene analysis videos, we'll be looking at each page of the February 2020 Strategic Case Study Pre-Scene document from CIMA. This pre-scene covers a fictional business by the name of Shinepodd that makes coffee capsules or coffee pods. So over the course of the next 3 or so hours, I'll be looking at each page of the pre-scene document and talk about likely exam issues and relate these points to objective theories from F3, E3 and P3, paying close attention to the new 2019 CIMA syllabus topics in the process. So let's take a look at this opening section. Shinepodd is the company that you work for. You are a senior manager now, so if you've been a student of CIMA for a while, you'll have come up through the ranks, starting as a finance officer most likely for the operational case study exam. Then you probably would have been a finance manager for the management case study exam. And now here you are as a senior manager at the company. So you're working in the finance function at Shinepodd. And we're going to refer to it as SD from now on. You report directly to the board and advise on special projects and strategic matters. So clearly you've moved up in the world, you have influence now, and you're expected to use that influence to offer advice on strategic matters to the most senior people at the board. Your focus will be long-term in nature. So we're talking about a 3 to 5 year time horizon, and you would have had a very short-term time horizon for the operational case study. You would have been dealing with day-to-day issues and operations. For the management level, that time horizon would have been stretched to cover a year to maybe 3 years as you looked at monitoring the implementation of strategy. But here you are now at close to the top table at least, advising on the strategic decisions being made. So you'll be expected to demonstrate strong leadership and people skills. They now represent an equal share of the marks, whereas in the earlier stages of your CIMA studies, the technical skills accounted for a lot more of the marks. So you're going to be dealing with the board, and you're also expected to understand not just your company and make recommendations that benefit your company, but you would be expected also to consider the wider context within which your business is actually working. So that means considering competitors, it means considering shareholders, it means considering the interests of the community in which you're working, it means considering environmental externalities. So all of that needs to be kept in mind when you're making your recommendations on the day of the exam. This is what a senior manager is expected to show. SD then is based in Midland, a fictional country that we know very little about. There isn't much said about the country throughout the pre-scene. We don't know where it's based. We don't know if it's an especially developed or developing country. They have their own currency, the $, and they're expected to present their financial statements in accordance with international financial reporting standards. Now, this company is an international business. It's a multinational, trades across many countries. So they're going to be exposed to different currencies and potentially adverse currency movements against the $. So exchange rate risks need to be kept in mind by the senior people. That's an area you would have come across in F3. SD is quoted on the Midland Stock Exchange, so it's a publicly listed company. This is an active and well-regulated exchange, we're told. So the buying and selling of shares is likely to be high volume in nature, and we're going to look later on at SD's share price in recent months. The companies that are quoted on the Midland Stock Exchange are required to adhere to the Midland Code of Corporate Governance. So that's likely very similar to the UK's Corporate Governance Code. And when we look at the senior people at the business and the makeup of the board later on, we'll be talking about that in particular. But it looks to be a company, SD, that has strong corporate governance practices in place. So, being a stock exchange listed company comes with some benefits, but it also comes with some drawbacks. The benefits, most obviously, would be better access to capital. You're not reliant solely on debt to make investments, acquisitions, etc. So you've got debt funding, equity funding. You can also use internal funding as well. There are drawbacks to being a publicly listed enterprise. Obviously, there's going to be more public scrutiny from investment analysts working at banks, etc. The general public as well is more aware, obviously, of stock exchange listed companies than private businesses. And of course, you're going to face pressure from your own shareholders for a return on their investment. And that comes in one of two forms, either through dividend payments or an appreciating share price. So thinking of some of the key areas from your objective test subjects in relation to the case study, recommendation of sound strategic options from E3 is going to be important, and we'll pay particular attention to digital strategies, which is a new area of the E3 2019 CIMA syllabus. And this is a company with a digital strategy in place. They're selling a lot of what they make through their own website. And there are dangers that come with that strategy, but obviously there are many potential upsides to that as well. Managing the risks associated with those strategies, including, of course, cyber risk, which is a new area of P3, is going to be very important. And securing adequate financing, because you're dealing with a long-term time horizon for the recommendations you make in relation to strategy, you're going to have to put long-term financing in place. So financial strategy is going to be a key area as well in this case. So let's talk about coffee. One of the most popular drinks in the world. It's made from beans that develop inside the berries of a family of shrubs or trees that are native to parts of southern Africa and Asia, but now actually these plants are cultivated right throughout the world. So there's one key ingredient really we're talking about in the manufacture of coffee, because from these berries you get the beans, they're dried and later roasted. So the fact that we're dealing with one key ingredient lessens the complexity of operations for a business like SD. The roasted beans are ground later on. They're mixed with very hot water, and there you have the result, which is coffee. So pretty simple in terms of the makeup of the product. But a lot of the value is actually being added by companies like SD in the roasting and combination of different beans to make different flavors. I just want to take a step back and consider some statistics in relation to the production of coffee from the IISD. The IISD is the International Institute for Sustainable Development. And there's some interesting statistics from one of its recent reports. First of all, 70% of coffee production, they say in that report, is exported rather than being sold in the country of production. It's leaving most of the time their developing countries rather, and going to developed markets. And the value for the exported products is $19 billion in 2017 terms. But the retail value of that coffee is $83 billion. So you can see the huge markups that companies like SD stand to make. So they're buying it cheaply and they are selling it for a much higher price. Now, there are ethical considerations in terms of fair trade and the payment to suppliers of the beans to companies like SD that we'll be talking about throughout this pre-scene. The value added, though, as I said, is often in the country of import. It's the combination of different beans into different flavours. It could be quite complex. And 67 to 80% of coffee is grown on smallholder farms in developing nations. So most of these beans are coming, as I said, from developing nations, and they're highly reliant on the export of coffee for the well-being of the citizens of those countries. Another statistic from this report said that in 2016, 34.5% of coffee producers adopted voluntary sustainability standards. So this is an industry that has come under pressure in recent times to treat suppliers of coffee fairly in developing nations, to pay them fairly, and there is an expectation often nowadays from consumers as well that what they get is fairly sourced and that the company they're dealing with is an ethical business and one that demonstrates good corporate social responsibility credentials. So that's going to be a feature that we discuss throughout this pre-scene document. So moving on then, coffee, very popular drink now. It has a bitter taste, but can be sweetened with milk and sugar being added. There are many different varieties, with flavour being affected by, first of all, the species of shrub that is selected to produce the beans, and then by the way in which the berries are actually roasted. Different varieties, we're told, can be blended to create an even wider range of flavours. And we'll see that SD has a very wide range of flavours on offer. Coffee contains caffeine, which is a stimulant. So there are questions to ask about the potential for dependency. There are, it seems though, more health benefits associated with the consumption of caffeine than there are potential dangers. The coffee is slightly acidic, we're told, which actually aids digestion. But in recent times, reports have showed as well a positive effect on cognition, being a stimulant. It's also shown to actually aid fat burning and may lower the risk of strokes and certain types of cancer. So all of that obviously plays into SD's hands. These are all messages that they can get behind in promoting what they sell. So coffee is a major commodity. It's traded on international markets. Usually it's priced in US dollars. It's one of the top agricultural exports for many countries. And in particular, it's important to developing countries. In fact, emerging market currencies often have a very strong positive correlation to commodity prices. And the fact as well that coffee as a commodity is priced in USD, again, raises the issue of exchange rate risk. Coffee is actually the second most traded commodity in the world. And as we said before, it has a huge role to play in lifting developing countries out of poverty. The thing though, with coffee being a traded commodity, one that's traded by financial institutions and traders worldwide, is that it can be very volatile. And that volatility has an effect on the farmers that are selling these beans into international markets. So it can be the difference between putting food on the table or not, depending on the price of this commodity. So quoted in USD, that creates, as we said before, a potential transaction risk as the domestic currency of SD in Midland is the M dollar. So the M dollar's position in relation to the US dollar will affect the company greatly. So it's important that they have strategies in place to account for that exchange rate risk. Looking at coffee producers then worldwide, we can see there are quite a concentration in South America. In Africa, we can see India as well. The top producers of coffee in the world are as follows: Brazil, Vietnam, Colombia, Indonesia. So all of these are developing countries in which farmers are likely to be quite poor. And as I said, there's going to be an ethical consideration here in the way a big company like SD treats its suppliers and, by extension, the farm workers working for the plantations that supply them with coffee. Buyers, I think, have considerable strength. So we're talking here about SD. There are many suppliers of coffee beans. They're scattered throughout the world. So a company like SD can adopt a kind of divide and conquer type strategy. They can have suppliers throughout the world, and in that way they're not reliant on any one. And the suppliers will know that there are many other options for buyers like SD, so they have to play ball in terms of the prices that they charge. There also is political risk in a number of these countries. The one that springs to mind at the moment is Brazil, where President Bolsonaro has been a controversial figure so far. You know, there are the dangers of erecting trade barriers and hurting free trade between nations. That could lead to tariffs, etc., which would raise costs potentially for SD importing coffee beans from these countries. So that is something that needs to be kept in mind as well. Coffee shrubs, we're told then, are grown in tropical countries. So the climate is important. We know that climate, of course, is always in the news nowadays, and the climate is becoming more volatile. So that could potentially disrupt coffee, the flow of coffee beans to Midland in the future as well. It takes, we're told, 4 to 5 years from planting a seed to getting coffee berries. So very long time to market, and that again creates significant risks if the crop were to fail during those years. If a certain crop was wiped out, it would be devastating for the farmers in these countries. Moving on then, we're seeing the environmental impact of this industry. It's significant, we're told here. And this ties into something we'll be discussing throughout this pre-scene, F3 sustainability reporting, which is going to be increasingly important for modern companies, demonstrating their environmental credentials and showing stakeholders that they think beyond the purely financial considerations to consider the wider social impact and environmental impact of their activities. 37 of the 50 countries a recent World Wildlife Federation report pointed to, 37 of 50 countries in the world with the highest deforestation rates are actually also coffee producers. So that is a concerning red flag. What's happening is that often in countries where coffee growers are abundant, they sometimes clear land to ensure they have enough space to grow the berries that produce the coffee beans, and they destroy important natural habitats as a result. So that is frequently being flagged up, and obviously in this day and age it's something that is frowned upon. Another part of the impact on the environment in this that this industry has is something known as the wet process, which is a certain approach to the extraction of coffee beans from the berries before the berries have actually dried, and it involves the use of huge amounts of water. And we will see later on that SD is actually encouraging this particular process, which means lots of water is being used up in the extraction of these coffee beans, and that is having a negative impact on the environment. There have also been concerns moving away from the environment to the ethical treatment of workers. There have been concerns about the exploitation of plantation workers who are forced to work long hours for poor pay, and suppliers overall, in thinking of Porter's five forces, the farmers and even the plantation owners who have a little bit more power, but they have little negotiating power in the face of these massive companies. This particular industry is characterized by a few big players. You think of companies in real life like Nespresso, for example, and there are 3 or 4 main competitors. They have huge bargaining power. The suppliers they're dealing with are scattered throughout the world. There are many of them, so they don't have a lot of power to negotiate good terms. And the danger here is as well that plantation owners are working their workers, their farmers, too hard for very little pay in return. So small plantations are exposed as well to fluctuations in world coffee prices. So when prices fall, they're forced to sell for little or no profit. So that volatility in a commodity that is traded frequently is liable to hurt the most vulnerable again. So ethical issues here in the supply chain. P3 then, risk exposure. These commodity price changes are a market risk to not just the farmers, but also to SD. So who bears the brunt of increases in this commodity price? If, for example, commodity prices rise, is SD taking the hit and holding prices down for their consumers and just taking an additional cost? Or are they playing hardball with the farmers and trying to push back against those price increases? So that isn't clear at the moment, but we'll be talking about that point throughout this pre-scene. So there have been a number of initiatives to address these sustainability issues. For example, there are organic coffee plantations which use pest-resistant shrubs and other strategies to avoid the use of chemicals so that the environmental impact is lesser. There are fair trade initiatives. They've been going on for a long time now, which involve paying farmers a price that's sufficient to enable them to support themselves and their families. And what happens in this case is that the end consumer actually bears the brunt of that price, of that cost increase. So some consumers have demonstrated a willingness actually to pay, and there isn't so much price elasticity there, where a little bit of a price increase doesn't actually have a huge impact on demand. And indeed, SD's customers tend to demonstrate an ability to pay high prices for a quality product. So it's likely that SD could convince them that a fair trade good is something that they are willing to get behind. There are questions, I think, that will come up on the day of the exam as to how SD is interacting with these farmers and whether they're taking advantage or actually helping them. There are, I think, though, major reputational risks that ST could face if it's found out that they're exploiting workers in any way. The Fair Trade Initiative, I think, is a good one for a company like SD. We'll see later on that it's a company that talks about sustainability. Whether it practices it is another thing. It's a company with a reputation to protect as a premium quality seller. And I think for that reason that if it's not already signed up to any fair trade initiative, that it should do so, because it reduces the risk of them being accused of treating suppliers and their workers unfairly. So you're reducing the risk of this accusation in accordance with the TARA framework. So let's take a look at the different forms coffee can take when it is being purchased for consumption. The first one, coffee beans and ground coffee. Consumers can buy coffee in the form of roasted coffee beans, which they then have to grind in order to make a drink. They could also buy the ground coffee beans. This ground coffee is made into a drink using a variety of different methods, but it involves mixing the ground coffee with very hot water. So The drinkers of this kind of coffee, they enjoy the aroma, but it is time consuming in comparison to the other methods we're going to look at next, and it leaves the consumer with the need to dispose of the used coffee grounds. Used coffee grounds, though, can actually be recycled and mixed in with garden soil, so that is an environmentally sound use of this waste. And the category of customer that tends to use coffee beans and ground coffee are coffee enthusiasts. They likely have some product knowledge and value quality, but they're likely to be quite a niche segment. A more mainstream offering comes in the form of instant coffee. This is manufactured by brewing coffee in industrial quantities, filtering out the used grounds, drying the resulting drink, and providing a soluble powder, often that is coming in the form of a glass jar. So this is instant coffee. It's convenient. It's very quick to make, but some consumers believe that it's actually inferior in quality compared to ground coffee beans. So customers who buy this kind of instant coffee, they're likely to be all about convenience. They don't care so much about the perceived quality, and this coffee tends to be quite cheap. Another way in which coffee is consumed is in establishments, coffee shops. So these are springing up from recent years all over the place. You have chains, but you also have lots of independent coffee shops. They prove very, very popular. They're a place where people can congregate to meet friends. So there's a social aspect here. This coffee is made by trained baristas. And so they have know-how. They use steam-powered machines that are actually very expensive. They could cost 10, 15, 20,000. So that makes them off limits to most coffee consumers, and it's difficult to create this in the home. The product being offered here is more complex than the previous two we've just mentioned and requires specialist skills and specialist equipment. Very, very popular, these coffee drinks, but they are the most expensive of all of these coffee types. And as we said before, the expensive equipment, it's also very large equipment, makes it inconvenient for the home place. So that high cost of equipment is a barrier for customers who would like to make this in the home. These customers value the highest quality coffee, can't easily replicate this at home, but there's also a social aspect, as we said before, to going out to the local coffee shop. So the last alternative is the one we're most interested in because it's what our company SD is making. Coffee pods. So there we have a little image to the left. Coffee pods make it possible to create coffee in the home that is close to the coffee you get in a coffee shop. So quality is very good. It allows customers to replicate store coffee or get close to it without the high cost of the machine being used or the space that it would take up, or indeed the necessary skills that a barista would have. So these machines, electrical coffee machines being used with these tiny coffee pods, are quite small. No problem fitting them on a kitchen worktop. Consumers require a supply of coffee pods, which is the main business activity of SD, which we'll see soon. Often they're sold online. Some of them are available in supermarkets. The pods are made out of plastic and aluminium. Now that's going to be important because plastic is in the news a lot recently, again, because of the damage it does to the environment. So that's going to be a recurring issue throughout this pre-scene. The impact of these products on the environment and how difficult it is to dispose of the pods. So customers who opt for coffee pods, they want high quality coffee, but they don't want to purchase bulky, expensive equipment that can be found in coffee shops. The used grounds that come from the pod, they have to be disposed of carefully because it takes time to cool down and it's liable to drip some coffee through holes created by the machine. There's a small risk there that a customer could burn themselves with these coffee pods. So that's a slight risk. The consumers find it more convenient to use coffee pods, we're told in the last part of this section, rather than ground beans. The product, unlike instant coffee, isn't actually considered inferior. So we're talking about a pretty good quality product. So you've got the best of both worlds. You've got the convenience of something like instant coffee, and you get close to the quality of the coffee that you would be served in a coffee shop.